We treat someone to a meal.
We just ignore it completely.
So, anyways, I'm getting over a flu. Everybody was in town for the Phoenix Open and the Super Bowl, carrying their germs into my fine city. So I'm wearing a turtleneck. I apologize for the turtleneck up front, but it's not. Is it a horrible look?
A Linz and Steve Jobs thing you got going with the baseball hat. Yeah, I don't hate it.
One more thing.
You'll be seeing a little bit more about Stay Grassy in the next. It's a golf company that we're investing in. I'm very excited about it.
I thought it was a weed venture.
Breaking news. So welcome everybody to Trends with Friends. Let me do an intro here. You are coming to you. Riley and I are in Social Leverage's headquarters. That is my favorite. The first piece of art I ever bought. There's Unicorn Baby in the corner. I've brought Unicorn back out because I'm feeling a little more happy about the world that we're in. We're going to talk about that. We're going to talk about organic growth, which is something that makes me happy and shows up in the charts. But with me today, Riley, shooting for the PGA Tour, but in the meantime, stuck producing this weekly video. And he has, but what a job! You go play golf right after this, and we have really probably one of the, I made up this term, I think, chart art. And there's, the first chart artist that I ever came across was Jeffrey DeGraff, who turns out to be kind of a legend in the technical analysis space, someone that JC looks up to. But there's two chart artists that I look up to, and one is with us every week here, JC Peretz, and he calls himself a technical analyst. I say I like the term chart art. It's just less geeky. There's Chris Kimball, who's also a great chart artist. Shout out to Chris Kimball, who probably
and a great guy.
Great guy. Probably had a golf cart stolen too. He lives somewhere in the Midwest. And then the shrinker of all things, Shrinky Dink. We need a shrink.
Shrinkology.
We need a term for. Are you an actual doctor? Like, am I allowed to say that?
Yes.
And not from Mexico or some like Latin American.
From
country?
Mexico.
No, really?
Yeah. No.
No. Which school?
Argosy University.
Hello.
The American School of Professional Psychology. It's a
that might
psychology.
be Mexico. When they put American in the
Mexico.
title, it could be Mexico. So wait a minute. Have you heard of this school? Look it up, Riley, for homework.
So
it's a real school?
It's a for-profit school, and it went bankrupt.
Listen, every school is going to go bankrupt, so no begrudging your shrink school. So,
But it was accredited, and I got a fine education. It's accredited,
So
APA accredited university.
Is my shrink. I pay a shrink. Phil's the shrink I don't pay for. And somehow it neatly will spend 10 minutes with you and package everything about your parents. So I highly recommend pinging him on Twitter, and he will DM you excuses that will help you get on with your life. But really is one of the softest, smartest shrinkologists out there. I don't have a nickname for you yet. Nothing as cool as is there something that people call you around shrinkage?
I'm the Pearl.
Like a no.
I'm the
He's
Pearl.
the Pearl.
Pearl dog.
So you are on Trends with Friends, where Phil, JC will start having guests. I think we're going to have Ted Mertz on next week for 30 years at Bloomberg to talk about AI. And Riley talk about trends. All right. So getting right into it this week, let's start at the top. It's February 15th. Last year was a shit show. JC has long been out saying, we put in a bottom in June. So this has been no surprise to JC. But there's a bit of a fever brewing because this is generally not a great seasonal time of the year, February. We've had a great run into February, December. January was a great run. And yet, there's a lot of cool things happening, right? You have a lot of leadership. You have the financials leading. You've got the broker, the retail. I think it's the brokerage index relative to the S&P breaking out to all-time highs. You're not seeing that in like the Robinhood of the world and
12,
Coinbase of the world.
Highs.
12, 13 year, which are pretty good highs. 2009 highs. You have aerospace breaking out. But JC, why don't you take it down from the top? There is a lot. It's not, everybody wants tech to rally. But I will say there's two things going on that are super bullish at the very macro, okay, which are machines. The demand for machines, latent and non-latent, because of AI is exploding, right? And we saw Microsoft invest $10 billion in OpenAI, and Phil will get to your going through all the YouTube videos of AI in a bit to talk about that. But you have this organic growth that comes from in the tech world. You have this interest rate move, which helps the banks earn money. And then you have in the real world, you have all this free time spilling over into probably the fastest growing sport of all time, at least in the United States, a sport called pickleball that no one dislikes. Whether you're 8 or 80 years old, you could play pickleball. And so you have this like insane confluence of events. You have the war in Ukraine, of course. You have the SEC fucking with crypto. You have, chip problems and the CHIPS Act with Taiwan. So there's obviously massive macro things happening. But underneath it all, JC, what are you seeing?
Stocks continue to go up. In bull markets, the laggards tend to catch up to the leaders versus the leaders catching down to the laggards, which you see in bear markets. You talk about technology rallying. Technology has been rallying. When you equally weight the technology index, it's up over 20% since the market bottomed in June. It's a very healthy rally in a very short period of time. So when people are saying that tech is struggling, they're not looking at tech stocks. In their minds, they might be like, oh, this one tech stock is struggling, or this group of tech stocks is struggling, but technology up almost 21% off the lows in June is the opposite of struggling. They continue to do well. The most beat up names in the world, the underperformers over the last couple of years, those tech stocks, those Cathie Wood stocks, those ARC stocks, high growth names that got slaughtered over the last couple of years have been the biggest winners, because in aggregate, the shorts, while they may have been right for a period of time, they did not cover their shorts. We have the data. They added to their shorts to the point where they came into the year the most short. So they were unprofitable in aggregate. There were some people who took profits, great, but we're not concerned with that. In aggregate, they added to positions and they are getting squeezed. All these perma-bear ETFs are absolutely slaughtered, down 60, 70% in a matter of weeks because they're short ARC, Tesla, Coinbase, MicroStrategies. We have the data. It's all public, free information. And fortunately, we have gone out of our way over the last couple of months to pinpoint the most vulnerable stocks that have way too much short exposure. Because if you're short, you're just promising to be a buyer in the future, as opposed to a shareholder. Shareholders are just promising to be a seller. But if you're short, you have to buy it back, and you're getting to see the squeezes. Because a lot of these things, they're not shorts that are covering their short. They're margin clerks that are forcing those shorts to be covered, and they're not using limit orders. They're using market orders and spraying the market, which is a domino effect, which causes other short squeezes by other institutions that are too leveraged. And it's a domino effect horizontally like that and vertically, because all those other stocks that also have short interest, they're short too. So all these things are squeezing. Look at Lemonade, freshly squeezed. You can't even make this shit up. It's like the trading guys laughing at us.
No, Lemonade, Jesus, that was just a beat. There are so many tickers for people to target short sellers. So what's the mindset of these people? Like, it was one thing to be bearish, and I definitely, got stopped out of so many things when my mood was sour after all these trends. It takes me, I'm not like JC where I'm digesting the data. I don't have the time. I'm a venture investor, but I've taken those stops out on trends, and now I'm looking for, we'll talk about big bases and relative strength. There are so many interesting bases and areas of relative strength. And on top of it, barring government screw-ups and war and macro events, there is, like I just said, some organic explosions happening around sports, media, entertainment, time on hand, and free time, and AI. So, why are people? What anchors? First of all, they're shorting ARC. Are these machines and indexes shorting ARC? Or are these people, JC? Or you don't care?
It's all of the above. I mean, remember, there's people who build the machines and algorithms, Howard. So there's all people behind the scenes with real money And we have the data. I mean, these are some of these stocks are 30, 40, 50, 60, 70% of the interest is short. So when you calculate how many shares it trades on a daily basis, you have some stocks like, I mean, we're not going to go name by name. Riley showed the list. We'll share it in the show
Riley,
notes.
did you pull up the list and we'll share it in the notes? Yeah.
Yep, we got that. We're already ready to go. But look at these names. If you can calculate the average daily volume, and you take how many shares are short, you can figure out how many days it's going to take for all those shorts to cover. In some cases, we're looking at 20 days. That's a month of trading just at average volume, just for the shorts to cover. So you want to talk about ammunition to the upside, and it's not just one institution. It's a whole lot of them, and they're on the wrong side. And people somewhere along the line forgot and think that earnings is what drives stock prices. That's the biggest lie I've ever heard in my life. That's not how markets work. Prices are driven by positioning. And in this case, the lack of positioning in those stocks, and they're getting squeezed. Tesla is not, literally doubled in a few weeks. It's not twice as valuable as a company as it was a month ago. Like, nothing fundamentally changed. Shorts are getting squeezed. That's it.
Shorts are getting squeezed.
So to add color
Go ahead, Phil.
To add color to what JC's saying there about this relative bearishness in the tech names, even as they continue to outperform, 20% was the number that you gave. There's this reference point bias that we have, right? And so if a stock makes a high and you own it, and then it comes down, your reference point is that high. So if you're under that high, you feel like you're underwater. If a stock goes to 100 and now all of a sudden it's trading at 60, you're not looking at where it is now. You're not looking at, maybe it bounced from 40 to 60. You're not looking at where you even bought it. You're looking at that 100 and you're going, man, it was at 100. Is it going to get it back to that place? And so there's a lot of room for us, the collective market participant, to remain bearish these tech stocks until we get back to levels. I mean, how far is Google from its all-time high? How far is any of these stocks? Many of these stocks.
There is room. The weighting.
Google has to go up 50% from here just to get back to break even.
There you go. Yeah. And how far up does how far does ARK have to go? So there's like so much work before a lot of these investors who are led by their emotions start feeling better and start feeling more bullish. So the stocks can go up a lot more, and there's still going to be this malaise.
Let's pull up, Riley, pull up the market leadership thing that JC had, that people are underweight equities and leaning into bonds too much. As someone who about 9 months ago started buying T-bills and now sees them, still around 5%, I'm very comfortable now switching. I've been nibbling and doing some things, but walk me through what this means to you, JC.
It's all about positioning, and investors are super overweight bonds and underweight equities to extremes that have rarely been seen in the past. And it's not just this fund manager survey from Bank of America, which we're looking at here. You can see, bonds are by far the biggest overweight, while stocks are the biggest underweight. It's not just this. You're seeing an institutional, just an aggregate. You're seeing it at the individual investor level. You're seeing it in the short interest on a lot of these individual names. I mean, you're just seeing the lack of positioning. You're seeing it anecdotally as well. I'm incredibly fortunate that I get to speak to, some of the biggest portfolio managers in the world on a regular basis and pick their brains. And I know what's out there. So you're seeing it in the data, you're seeing it in the conversations, and you're seeing it in the actual positioning in the market, and you're seeing it in the sector rotation. The most beat up names are the ones catching up to the leaders, like industrials that have already been leading for a while now, versus the opposite, where in bear markets, the leaders finally are, succumb to the selling and then sell off, and you have those leadership groups to the downside. That's not what we're seeing. We haven't seen it in a long time. People keep asking me when the stock market's going to bottom. We're 8 months into this bull market. If you haven't seen it, it's only because you're not looking. But they're going up. They're going up to the upper right, and more of them are.
Yeah, it took, for me, I need to see growth or not fake growth. Like, hey, this wallet's cool or this NFT is cool. I need to be something that's just very simple. And listen, as little as I use ChatGPT, and we'll switch to that now, It's so interesting. Phil, you've spent a lot of time watching the videos of what's his name, Sam. I think Sam, basically the
Sam
founder
Altman.
of Sam Altman. Like, what's your takeaway as both an investor and kind of a thinker about this?
Here's one thing. I mean, AI is getting so much hype right now.
Yeah.
However, if you look at a lot of the numbers on these videos, how often they've been watched, he's got a lot of videos out there that have been watched 3,000 times, that have 3,000 views. I mean, there's some that are bigger. He did one with interview with Reid Hoffman, has a bunch of views, but even that one, maybe 30,000, 40,000 views. It's not like it has 1 million views or 3 million views or 5 million views. And then these other ones have some of them have 8,000, 3,000, 5,000 views. I would have thought, considering all of the drumbeat and all of the noise, I would have thought that you would want to go, that many more people would want to be going right to the source, watching a lot of these videos. The other thing that stands out to me is that, and he makes the very bullish case. He has a consistent case over time, and it's an uber bullish case, obviously. But one thing that he's saying is that we don't recognize, and we are not taking into account potentially the amount of efficiency that that AI is going to add to the way that these corporations operate. That they'll be able to cut costs massively, and that will obviously affect, positively affect the profit of the company, but it will also have social ramifications in terms of possibly unemployment rates, possibly having a lot of people out there who really don't have that much to do anymore, or can't find work, or have been displaced. I'm a little skeptical. I find it incredibly provocative to hear that. It reminds me of one of Kurt Vonnegut's early novels called Player Piano. Those pianos that play themselves, where it's like this futuristic dystopia where the only people left who work are engineers, and everybody else is kind of reeks and wrecks, and they're just sitting around in bars and they got nothing to do.
Pickleball and golf proved that wrong, by the way.
So if you could find meaning in pickleball, I have no problem
People
with that whatsoever.
are.
I mean,
Well, what I'm saying
healthy,
is
great.
No, but what I'm saying that's an interesting data point that no one's watching Sam's videos, the creator.
Would have thought they'd have a lot more.
Yeah.
Views.
But maybe because they just are boring and not, people like hype. But were they interested? People need to search Sam Altman on YouTube.
He's great. He's
been right so many times over the last 20 years. It's bananas.
He's advocating just a really provocative new world that is based on the cost of doing a lot of things just crashing, and the resources required just going way down.
Yeah, not in the charts. And JC, just because as someone who loves investing in startups, JC got the bug, and Phil, you've done it with me. My big, when BlackBerry came out, or when BlackBerry was in its prime, JC, I don't know if you remember, but Phil and I remember. This was like it wasn't that long ago. It seemed like they were ruling the world, right? And we didn't have smartphones, right? We were just
15 years ago.
15 years ago, I said you would have to pry this from my dead hands, right? That first iPhone seemed like we would never switch, right? So now here we are, and Phil's the geeks are loving this, saying this is the most dystopian moment. The machines are finally having control. But at the same time this is going on, the amount of people that showed up at the Phoenix Open, the amount of people playing pickleball, the amount of people that are giving up Facebook. I myself am using social media less than ever. I think this AI moment is going to take us away from our screen time, right? Like I'm super bullish on YouTube, and I'm super bullish on podcasting, not as a business, just as something to share knowledge and to to networks amongst small groups and to sound out thoughts. But if you think about this trend that I think we're about to undergo, which is kind of almost a perfect trend, assuming we don't all blow each other up, is the fact that as this moment where everybody's saying machines are going to rule the world, maybe they'll rule it in a way that allows us to just walk away from our screens and start traveling and running around and interacting again and eating out and getting these joyous experiences. So the things that I'm seeing are really have got me excited is that people are using their free time to get away from their machines. At least I'm starting to see that at my age. And I look at that with Twitter. I know JC loves Twitter. I used to love Twitter. JC's great at using it. I don't know, Phil, where your head is at here. It has its purpose.
And I think most people use it wrong. If you don't think that Twitter is great, it's because you're using it wrong. There are people who are basically just like to be there because they're just angry and it's their way out, right? It's their release. Yeah. That's one way to use it. I think that's a stupid way to use it. I think you could go running to release some energy and some frustrations, or exercise. I mean, there's a lot of different ways than yelling at people on Twitter. I think that if you're not making friends with people that, have common goals, you're following the wrong people. The old saying that we've been saying forever, I didn't make this up, was that Facebook is for people who that you have nothing in common with, and Twitter is for people who you don't know, who you have a lot of things in common with. And we've seen that over the years as I've traveled around the world and met people who I met on Twitter. You two are two of those people, you three or whatever. There's a lot of people over many years that I've met in a lot of different countries. And a lot of them have become mentors to me. I've become mentors to some. We have become friends. We've shared ideas. And, if you're not quick with the mute button or the block button, if you're soft, right? If you're not mentally tough, fortunately I spent a lot of time in dugouts and locker rooms and on trading floors. I've heard a lot worse than, with, Cheddar Cheese 69 is telling me about my Boeing chart. Okay, so you don't like my Boeing chart.
That never bothered you, but what I'm saying
every day
is,
how, you don't.
You're coming into your prime as a content creator, right? Like, I see it in the way you share and in the way you think. Because it starts out with clear thinking. You and Phil have very clear thinking. So social media, of course, makes sense to you as someone who people appreciate their content. But what I'm seeing as someone who's used it forever and has been through cycles with Yahoo Finance, I see something different. Phil, are you sensing anything different? Meaning, no matter how good a content I share and how little I find a complete difference in how the product works, in talking to friends, young people who aren't using the product, and then just anecdotally and seeing the way Musk, promised one thing and is doing the exact opposite. From sitting with Rupert Murdoch to amplifying his tweets to making sure everybody just see his tweets. These are things that we never thought of at StockTwits, never thought of doing. Saying, hey, make sure Howard's tweets, make sure my messages or Phil's messages or stay at the top. You know what I mean? These were not even things that crossed our mind, Phil. So how do you think about this as like a product and like a strategy that they're deploying? And what do you think of the product? Because you used to love the product.
I don't think I love the product, and I think that JC has a great point. It's all how you use it. It's there's some people out there who are it's just poison and infecting, and then there's other people out there who are connecting and spreading their best ideas. So it's a perfect double-edged sword. At the same time, recently, there's no question it's deteriorated, and it's just the quality of the network itself and the quality of the product itself is deteriorating mightily. My hope is that that's a temporary thing, and that, eventually, they fired all these people. There's some problems there, and then they kind of get it together, and they get a CEO in there, and then, Elon goes and does some other exciting things that takes his interests away from always being on Twitter or whatever. And the egomaniacal thing, and so that's what I think. I mean, I'm in a position right now where I'm building a brand, and so I want to be there, and I want to be networking, and I want to be sharing ideas, and I want people to be reading my stuff. So I have an interest in that. But I do think it's probably short term. I think there's an irony in general, going back to the broader discussion. I think there's an irony, and this goes back to what you were saying about BlackBerry and about technology in general, Howard. I think there's an irony that technology is supposed to make our lives easier and make us more efficient. And it seems like our lives have only gotten more hectic and distracted since the rise of the mobile device. And so I think there's something off there. There's a big disparity there. And so when Sam Altman says something like, hey, we're going to have all this free time, and there may be something that he's missing in there. Life might only get more hectic with the greater automation that AI brings. Yeah. There's unintended consequences I don't think we understand. On the other side of that coin, I do think that we live in an age of the greatest level of self-determination that has ever existed. This is like a bigger topic that we're not really talking about, but it has to do with this. We have greater self-determination now than we've ever had before. We have this internet in our pocket. It has all the information in the world that we need, that we can find, and we can do anything that we want. And if we have great ideas and we keep coming back, we can share those ideas and build any type of brand that we want. It's magical and incredible. And so that is sort of the positive side of that. We can go and we can change our lives. We can self-determine. We have control. We have more agency than we've ever had before objectively. No caste system, no overlords. We can make for ourselves. So I think, everything has two sides to it.
So switch gears, the good discussion. I'm not knocking Twitter. I still use it. I just find that I'm not getting, maybe I'm using it wrong and the product's changed, but I find that hard to believe. I think I've never changed in how I use it. It just keeps changing around me. So maybe it's just a time factor and I don't have the time to put into it. But I mean, it would be a shame to lose it because of what we've all built on top of it. I can't leave because it's my only trick, right? Like, it's a nightclub for me, and I'll be the last guy that turns out the lights. And I think that's why I've always taken it so seriously, is that, like, you're taking a shit in my nightclub, that's why I've been so passionate about Twitter, just fucking keeping the doors open. So switching gears to this week, right? Airbnb report. I want to pull up an Airbnb chart and then a Shopify chart, and we'll just chime in on this. These are two important Web2 companies. Airbnb kind of blew away numbers. Again, the chart, I don't know what the chart shows. JC can analyze it for me. I own a very small position. Mainly, and I'll walk you through why mainly, is that the valuation to me, and again, like, technically there's a much different look, but here we are at an $80 billion company that's definitely blowing doors, right? They're going to do $2 billion in rest of they're on pace to do $8 billion in revenue. But here we are in a 5% interest rate world. It's still trading at 10 times revenue, and I don't know, hundreds of times of earnings. But there is no doubt that this company will be around for, in my opinion, 100 years. So, JC, what do you, when you know what I know, do you just avoid it, or is there something interesting here, or how do you look at something like this when you're super bullish about a brand, but the math doesn't make sense?
At the end of the day, it's the same story that we were just talking about before. It's included in all those high short interest names, all those ARK names, Cathie Wood. It's in the same basket. It literally IPO'd the month that the stock market peaked in February of 2021, when the new 52-week highs list peaked. Everybody had a SPAC. The NASDAQ advanced decline line peaked. All of that was February of 2021. Airbnb IPO'd, peaked, obviously, and then came crashing down from there, lost what, like 60% of its value? And then when did it bottom? It bottomed
when
June.
So many did. Like, if you look at Cloudflare, some of these leaders, they all had that whoops moment at the end of December, where there was maybe that last bit of tax loss.
Right, but the bottom, it really bottomed in Q2 when a lot of other things bottomed. This is one of the underperformers, like the S&P 500, for example. They made a brief new bottom and then ripped, but at the end of the day, it's the same category. So when you're wondering how a stock is going to do, which way is it going to resolve, you want to look around. What are its brothers and sisters doing? What are its cousins? What are similar stocks that behave in similar manners, that are owned by similar portfolio managers? What are they doing? They've been doing exactly what Airbnb is doing this week, right? They're ripping higher, and I mean, doesn't have a high short interest, but it's in the same category, same group of stocks.
I mean, how do you rebuild an Airbnb? I don't know if you use it, but
there's no lift either, right? There's no lift. Is there? I mean, there's no lift.
There's no lift
to Uber,
their Uber,
right?
Well, there's the VRBO. There's VRBO. And there'll be tons of little niches that nip at their bud. But my issue is like this. It's like Cisco in 2001. It ain't going away, but I can still see it marking time forever. But technically, it's pretty interesting there, based on what JC's breakaway gap there. My problem is I can't visualize this as a $200-300 billion company, and so maybe there's a way to trade it with options to get you that 4-to-1 risk reward. But it's hard for me to own companies when I don't see the catalyst for it like doubling and tripling, just based on law of large numbers. And I see that for all the Web2 leaders. If we pull up a chart of Uber, it's the same thing. They won. They fucking have won. They figured out how to get cash flow positive. Uber Eats, I'm sorry, I'm using it. I fucking never used Uber Eats. I used it for the weirdest things. But I use it for Chinese food and Nobu. So, but if we look at Uber, I'm like, how do I own something that's, and it's won? Like, Lyft is a complete disaster. DoorDash is a complete disaster. So their competition is going away. So I guess it's just trying to figure out what the potential TAM is of these things. But like, Uber's never been in a stronger position, I think, macro-wise, in terms of the actual product market fit and market share than it is right now. So again, these Web2 companies are asserting dominance. Let's pull up Hood, which I talked about last week, and it's kind of done nothing, but it didn't implode at least. I was worried about them. And, so many mistakes. We talked about it last week and had another $57 million error. I don't like their media strategy. And you can see it. It's underperforming its, Web 2.0 peers. But I just wanted to follow up on that because we brought it up. Anything here that's interesting, JC? It's just
flat. It's flat since the earnings. You had some volatility. It looks like it's going to be resolving higher. I said it before. I think the risk is up. I don't know anything about the business. I don't really care either. I look at its brothers and sisters and its cousins, Airbnb being one of them, Coinbase, all those art companies. They all look very, very similar. When you go back and look at Robinhood, Robinhood peaked in August of 2021. Literally, the day it IPO'd was the peak, and then it completely collapsed from there. Shareholders got completely wiped out. And the bottoming process has been going on since the summer, right? Like a lot of other companies in Q2.
Yeah.
So many bottoms. This is the same. So if you're wondering in what direction is it going to go, you want to go look at all these other stocks that look exactly like it, that behave very similarly. And what are those doing? They're going up and to the right. So I think the risk in this one is the same.
So, and then Shopify reports today. I'd like to chime in on that, JC.
So it's Wednesday. It's Wednesday now, by the way. So this isn't going to air till. But just so everybody knows,
but I just say we should talk about it.
Watching this.
I'm long Shopify, but this is looking really like an interesting setup. It is the leader in e-commerce. The question still comes down to TAM and how big this can be. But again, bottom let's say, well, it didn't really bottom in June, this one. This just did that break, just did that gap in September. But maybe this bear market has been good for Shopify, and then all the little startups that were going to take pieces away from it just are never going to make it now. So you got to think through that part where what's bad for Shopify is worse for the smaller competitors that don't have the capital base or the user base or the good product. So it's just really an interesting time in Web 2. So it'll be interesting to see. I'm more interested in just their outlook and how they're thinking, because there's, Shopify's so tied to Apple. There's, and growth, throttling on Facebook. So that's going to be an important company to watch, and we'll check in on that next week. All right, let's switch up. That's a lot of stock market chatter. Phil, let's go, because this show's also about life and health. I brought up testosterone and Hone Health.
Mr. T. So your nickname is Mr. T.
Mr. T, my T
Yo,
came
Mr.
in at
T.
519. I was going to get a chain that has my T score. But I shared this Men's
I
Health
love
article
that.
with you.
Mr. T. So you have great testosterone. You did it naturally. You weren't taking any...
I wasn't, but I mean, there's a million ways to
any-
measure it. If I showed that data to 10 doctors, they would tell me 10 different reasons why I need to try drugs. So, I sent you this Men's Health article. I asked you to digest it. Where's your head around this? I mean, I don't know, I'm 57. How old are you?
55.
It's 55. And JC, you're 35, 40?
Turned
41
yesterday, my friend.
Oh, yeah, 41. So you don't have to think about any of this stuff, although you should be standing. And then Riley, whose testosterone is probably like $4,000. He's just spilling it on the desk.
He's got a hard on right now.
Is that
Just
allowed
talking.
in the PGA? Does the PGA allow the testo?
Oh yeah, they wear the tight pants. They're flashing this stuff all the time. The tight white pants with the shadows. Hey, so Phil, like I say in that Men's Health article, is there something there? Is there something to this whole thing?
So the low testosterone that we're seeing is a reflection of a much larger syndrome, metabolic syndrome, right? So we live in a culture where obesity is increasing, insulin resistance is increasing, sitting around doing nothing is increasing, less
Netflix
people
and
move
chill,
their
yeah.
bodies.
Yeah.
Sleeping is getting worse. And so you have this higher blood pressure. You're in your 40s and 50s and you're 30, 40, 50 pounds overweight. Chances are your blood pressure is moving up. Your blood sugar is going higher, and risk of diabetes. And this is all one syndrome. It's like the standard, it's a reflection of the standard American lifestyle, And so so I think the low T is a reflection of that. So I think for me, the first line of defense would be to get yourself healthy. Eat stuff that, eat steak, move your body, do some push-ups, get yourself some sleep, and then get up and do it again tomorrow. And you lean, you get yourself lean, and your T's gonna go up. Now, if that doesn't work, and everybody has different ways, and I think actually one other aspect of this standard American lifestyle is our tendency to want to use drugs to medicate everything. The pharmaceutical companies are huge. They advertise to no end. They're in your face. They have the government in their pocket with lobbying. And so we have this drug culture. So I want to stay away from that too. Now, again, if all else fails and you really, really, really need it, and sometimes these drugs are a good thing, great. But I would say first line of defense is get yourself leaner, start moving your body, start eating some, nutrient-rich foods, get outside and get some sun. Vitamin D and testosterone are linked. Do all those types of things first. And then, if you still have a problem, you can explore some type of treatment.
Yeah, for me it was more like it's available. Like, as an indirect investor in home health, I just heard enough people talking about just getting the data mentally is a note. And now, granted, it could play tricks against you. If my data had come in at 200, I probably would have rushed to try drugs. So part of it's just that celebration of knowing your number and not feeling stressed about it.
As an investment.
No, I didn't mean it. I wasn't talking about it as an investment.
Okay.
I was just talking. Oh, it is an investment to get your data. Is that what you?
No,
meant?
I would say as an investment, these that company that has like a treatment for it or whatever, I'm not going to go say that's a bad idea because we live in the standard American lifestyle is there for a reason. It's not going anywhere soon, and people love a quick fix. And people will
No, but I
take a
more
pill.
meant, Phil, about getting your data and having that data just in your arsenal to know. That's kind of what's intriguing to me. I never knew that, and it's just something to put in the back of your head. Maybe it could work against you, but I never thought I had low testosterone, but it was just everybody around me was getting tested, so it was just something that I did. And I don't know if it leads me down another rabbit hole, but now I'm starting to notice so many more articles like I shared with you on Men's Health. We'll share that in the link. But I think it's a topic, maybe not for 40-year-olds, but once you get into your 50s, I think it's really an interesting part of getting healthy is knowing your levels and really understanding the data from your body, right? No different than people wearing Whoop, which I never got into, or the Oura ring. I don't know. Do you guys do that stuff? Do you wear that stuff? It just seems uninteresting to me. I have the 8 sleep, and it's
Phil? You want to know something, Phil? I'm data driven, obviously. As somebody who looks at markets all day long, I just look at data and numbers and come up with conclusions with incomplete information, to the best of my abilities. And I do this all day, every day for many, many, many years. So I thought that sort of behavior would translate in my health, and I had a spreadsheet, and I would keep track of, what I ate and the sleep and everything, and the data was out of control. And it really wasn't until I stopped counting it all and just, looked at it more like a lifestyle, like just shut up and go for a run. Don't worry how long it takes. Just try to do it as fast as you can or whatever. Sometimes I clock myself, sometimes I don't. But that sort of, believe it or not, just making better choices and kind of just going about my day differently and smarter really is what worked when I stopped collecting all the data. Isn't that interesting, Phil?
Buddha did not need an app. Buddha didn't need an app.
Yeah, that's why he looked terrible.
He didn't need a meditation app. He didn't need a meditation app to reach nirvana, sitting under the Bodhi tree. And,
Listen,
I agree. If you wake up in the morning and you got a little wood, your tea is fine. You're 50, you're 57, you're 58, you're 55, you're 41, you're whatever age. You wake up in the morning and, you got a little thing going on.
Does it matter which way it's pointing?
Your tea is fine. You don't need to
REM
measure.
Sleep, right, Phil? That's a characteristic of REM sleep, right? That's REM.
If you wake up flaccid, then you want to.
You're healthy.
That's something.
If you wake up firm, you're healthy. You want to have
a little wood there. You have a little wood going on when you wake up in the morning. That's your hey, your tea. That's your body's aura ring. That's your body's aura ring. Your body already has an aura ring. You know what I mean? We know when we're tired. We know when we're cold. We know when our heart's beating fast. We know when all of that. We know when we're out of breath. We know all of that stuff just by, internal cues. Interoception is the fancy word. We know when we're low T. We can't get it up. Word. That's the thing. Yeah.
I love it. He just shrunk us. All right, Phil. Well, luckily my numbers came in good for now. So you're saying if my numbers are good,
you're Mr. T. Mr. T. You're Mr. T. Love it.
Speaking of wood, let me show you something.
Blessed. It's beautiful.
All right, so let's end it with a couple ideas. My idea this week. Let's go. We talked about last week's. JC had Tesla. He's been on a roll. Last week's your idea was a bank or something. If we could pull it up, I forget the idea. It had a big base. It was some financial company. JC, do you remember?
Last week, my trade was Sonic Automotive.
Sonic Automotive.
A third of the float is short. It's making new all-time highs. I own it personally. The trade remains the same. If we're above those former highs, I think you can own it. $60. It's a pretty clean level. My trade today, listen, we're in a raging bull market. Punch up Goldman Sachs there, Riley. And make sure you include the, do you got the magazine cover? It was on the cover of The Economist magazine.
Yeah, Goldman Sachs.
I look at these as contrarian indicators.
Goldman low T. Goldman has the lowest T of any bank.
Low T.
Low T Goldman.
The stock price is going from the lower left to the upper right, which is all I'm interested in. And so with sentiment as pessimistic as it is, coming from a publication like The Economist, I will happily take the other side of that, as we often do. 376 is the big level for Goldman for me. Above that, I think you can own it. I think it's got 30% of upside. It's a raging bull market in stocks. This particular cycle is being led by financials. Within financials, broker-dealers are the leadership group. So it's already showing relative strength. It's not this cute idea where I'm hoping one day the market agrees with me. The market already agrees. It likes this stock. It likes this sector. Broker-dealers in general are doing very, very well. This is just the latest example, throwing a little mix of The Economist pessimism. That's good enough for me. Long if we're above 376. Let's go. 500 is next.
Okay, 500 is next. I brought up iBanker last week. Did that continue? So that's like my favorite broker.
Interactive brokers.
Interactive Broker, sorry, IBKR.
Looks great. The right
I don't know
space.
if it continued. Yeah, it's the right space, so that was the same space. My weird idea, he's got Goldman. My really weird idea is Silvergate Bank, SI, which is the worst possible thing to be, a crypto bank. But this thing is interesting to me because the more work I do on it, the more I see that like the banks already own it, right? BlackRock's in there, and it's interesting to me as a spec play around crypto that is a stock. So that's one that I'm watching. I think it can easily get into the 30s and 40s. I could do it in a day.
The highest
could take
short
6
interest
months.
of all of those stocks has the highest short interest.
Okay,
I was waiting for that.
All right, so maybe that's why it's so volatile, is it has the highest short interest. I don't check the data. I just am so fascinated by how hated, crypto is, and if I look at who's on their cap table now, like it's become kind of a regular bank with crypto pipes possibilities. So I haven't done enough research, but that's one that's super interesting to me. Very speculative. iBanker, I still, invest Interactive Brokers. I still like. If I were to be an accumulator of one of my favorite tech stocks, it's Google. Every time it drops on this stupid, AI news, I think it's the weakest. The FANGs are weak, but I'm not giving up on Google. Obviously if it drops below 80, we got a different story, but I can't believe how people have just quickly said search is dead, and that ChatGPT is going to win. And at the cost of what ChatGPT costs, that would be insanely profitable for Azure, but it's also going to be profitable for Google's cloud division. So again, it's a behemoth, but I'm going to stick with Google on accumulate on weakness. But overall, I think we can say, JC, you and I are aligned. Like, if you're shorting stocks right here, I think you are not looking at the data and not looking at.
I think if you're shorting stocks with 70% short interest, you're out of your freaking mind. I think you're crazy.
Clear. Phil does not have a stock for us. Phil, you don't have a stock for us, I don't think. Go ahead, Phil.
You still like buying all-time highs, right? I mean, Interactive's making an all-time high.
I do, because
that was your shtick, by the way, for new people. Yeah. People who are new to Howard. That was his shtick going all the way back. It was like making all-time highs, super strong, get in.
Yeah, so that has just not, if I was just buying all-time highs, it would have been a very tough last year. So I didn't, as I was getting stopped out of trends, I wasn't reapplying money because it's just the risk-reward was just so low. But what I love seeing is a bad market with heavily shorted stocks and all-time highs, right? Like Goldman's not at all-time highs, but I agree with JC because of the banks. It's a good environment for banks. We may hate them, but it's a good environment for them. But this
Interactive, that's an all-time high.
You throw in an all-time high on top of that, in a sector that's working, it should easily be able to tack on 20%. Again, these aren't going to be stocks that double and triple. These are not like garnering huge market shares because of some technology advancement, but a great product. It has a great user base. It has the math of the economy lining up well for it with interest rates, and it is relative strength at an all-time high. So those are ones that I can't pass up. There's just not many of those. But JC will say they're coming up in weird industries like ITA, like the aerospace industry. Boeing, unless the reason Boeing can change overnight if a plane crashes, but Boeing right now, if we were to look at Boeing, is like basically nobody who owned the stock before that last 737 crash still owns it, right? Like everybody's been shaken out of that company. And, I can't buy it because it's not all-time highs, but like if I were to look at something that in a strong sector that could go much higher, it would be Boeing. The risk being...
That was my trade in the first
they're
episode.
Boeing. Okay, yeah, so I just have a bad memory. So there's just so many names, which is what is fun. There aren't that many at all-time highs, but...
And Howard, you're making a great point. There's so many names. The list of names breaking out is getting longer in bear markets, that list gets shorter if the list exists at all. The list of new lows continues to get longer in bear markets. In bull markets, the list that you are describing, exactly what you're saying, is what happens in bull markets. We have the data. Go back 100 years. What you're saying happens in all of those bull markets.
But we also have organic catalyst, which is just there's a product that people are going bananas for and having fun with, which is ChatGPT, which is good for many sectors of the world, right? Knowledge, fun, productivity, research. And so, crypto is like kind of fake in that what is crypto? It's money. Okay. But it wasn't a growth sector. It's just money. It has tremendous utility, and narratives were formed around it. There is no narratives around ChatGPT, right? It's just working. So the real question about ChatGPT comes down to this. Is it semiconductors or is it the NASDAQ? If we were to pull up, and I wrote a blog post about it today, semiconductors versus the NASDAQ 100 over 1 and 10 year periods, semiconductors have blown away the NASDAQ 100. And we, as a kid, grew up they were textbook cyclical companies, right? Because they were chips were only used, the market's closed. Chips were only used in computers, but now they're in everything. And so, this is just one of those, another data point where not only are the bears leaning the wrong way, but there are some signs that there are some catalysts for real growth out there. So anyways, hope we're right. It doesn't mean we are right, and we'd have to retrench pretty quickly, but that's why I want to follow up on these ideas. Phil, any fresh ideas, or you want to stay out of the markets and just give us a tip?
Here's my recommendation. Well, aside from dollar cost averaging into low cost broad market ETFs, which is chef's kiss, for the next 10 weeks, we are getting more increase in sunlight every day than at any other time of the year.
I know, it's a good
So
time
for the next 10 weeks, you're getting 2.5 minutes or more of new sunlight per day, increase in daylight time. Get up in the morning, go for a walk. Put your phone on airplane mode, go for a walk.
Can you just turn it over?
You could do whatever you need to do. Leave it at home. It's unbelievably great way to start your day. You get that morning sun on you. It resets, it recalibrates your circadian rhythm, helps you sleep later on that night. It allows you to increase your presence in your mindfulness and presence in the moment, in the present moment. And it just allows you also for your brain to wander and for you to have increased creativity. It's an incredible way to start the day. I'm super bullish, especially for the next 10 weeks, taking that morning walk.
Yeah, we are through the worst part of winter, so no matter where you are, you have no excuse anymore. Now's the time to start mid-February. Now's the time to start shedding those winter pounds for sure. That's on top of my mind right now. And I'm looking good in black. And if in doubt, wear some black.
Dude, you look great. You look lean. You look lean.
JC, are you still on the program? How many eggs today?
Nothing today. It's 4 o'clock. Haven't eaten anything. Had black coffee.
Yeah, I'm gonna go eat with.
Pork loins. I'm gonna throw
Payway.
in 2 massive loins that have been marinating. I don't even like the loin. It's my
We're
wife.
throwing loins.
My
We got
loin.
wood.
Like
We got
pork
loins.
chops.
We've thrown in some wood and some loins into this podcast, so there's no
Give me
secret
some
words
chops.
in this podcast.
Keep the loin. Give me the chops.
All right, boys. We will check in next week. Seems like we're all doing well. It's good to see you, boys, and we'll be back with Trends with Friends next week.
Adios.
Adios. Nice job, JC.